But, it was rather like Hotel California. The silver went to China and didn't really come out. So it seemed to me that they were building stocks the whole time. And at the same time, of course, they would hedge the position through JP Morgan in the market um, on COMEX futures. So that kept the price down. And well, the thing that's fascinating is that all the attention, of course, is on gold. Gold has been rising, and we sort of look at the gold silver ratio and we see it's 92, and we think, oh my God, this is it's always disappointing. It never does what it should do, and so on and so forth. But then I was sort of toying with some numbers the other day, and I noticed that net exports out of China in 2023 almost exactly balanced the shortfall in the Silver Institute's figures. And this sort of confirmed a story which, I sort of stumbled across a long, long time ago. And I don't know if I've said this on your show, but I was speaking at a conference in New York, and it was one of those conferences where you had a lot of junior silver miners and gold miners and prospectors and all the rest of it, with stands, obviously trying to raise money, for their activities. And I think there was something like, I don't know, it's something, at least a dozen silver enterprises represented there. And I went and asked them all the same question. I said, you mine silver, but you got bills to pay. How do you turn your silver into cash? And the answer was always the same. A man from Glencore would come along and he would inspect the doré. He would give it a value. They would be paid by a major banker, who I assume was JP Morgan. And it was then shipped off to the refiner. So I said, well, do you know where it was refined? They said, well, we don't really, but we suspect China. Now, it's actually made a lot of sense, because in those days, and I think it's still true today, I mean, refining silver doré is not a very environmentally friendly job. And of course, this is something that China placed an emphasis on, refining gold and silver. But it was rather like Hotel California. The silver went to China and didn't really come out. So it seemed to me that they were building stocks the whole time. And at the same time, of course, they would hedge the position through JP Morgan in the market on COMEX futures. So that kept the price down. And of course, it's not as if this sort of silver doré or in any form went through the market. No, it didn't. Basically, it was priced on the market price, if you like, which basically means that it bystepped the market. So this idea that there was a supply and demand factor actually didn't happen. So they were able to control the price, if you like, by this sort of three-cornered trick, with Glencore, JP Morgan, and obviously the People's Bank of China, who incidentally had complete autonomy for handling silver trade, imports, exports, whatever. And so fast forward to 2023, when I see that net exports out of China of silver, and incidentally, those exports mainly went to, guess where? London, Switzerland, Hong Kong, and Singapore. And India was somewhere in there, but we know that India has been ramping up its photovoltaic output. So you would expect some of the silver to have gone there. But just notice that the other places, they're all financial centers. I just don't see how Hong Kong and Singapore and, if you like, Switzerland really feature in this sort of electronics and photovoltaic and all the rest of it industries. So this is obviously market related. And I think basically we can say, I think with a fair degree of certainty, that the Chinese are basically running the silver market. So, that leaves us with a question of what's their future policy going to be on this? Now, tariffs obviously come into this a bit, I suppose, But mainly, what China has done, I think, is it has accumulated a large stock of silver, which has value. Now, it can take one of two approaches to this. It can say, well, we want to continue to control the price because we're going to continue to have demand. Or they can say, we've got such a good stockpile of silver, we don't actually care what the price is. So if it goes up, I mean, we can say that doesn't it look good for us? But of course, it's more expensive if you like to use. But so what? Everybody else is in the same boat. So they're two completely opposite views that they can take on this. I think that it's becoming more in their interest to protect their stockpile, having effectively fed silver into the markets to suppress the price for the last. I mean, we know the Silver Institute says there's been a supply deficit. Supply deficit for the last 6 years. I mean, taking the ETF variations out of it, it's a solid 6 years. So, but it's longer than that. So I think that the Chinese probably are going to take the view that they rather hold on to their silver stocks rather than just keep on chucking it out in the market to try and suppress the price, which is interesting because if you look at the charts, a breakout from 34 and three quarters, 35 level, I mean, it could shoot up to the moon. And if the Chinese stop supplying the market, if you like, trying to control the market, then this could move really quite quickly. And it's happening at a time when everybody that I know has basically lost patience with silver. They think, oh, God, don't talk to me about silver again. Particularly when gold is the real story. That's the one that's really right. And I mean, the other thing which is fascinating, I think you might throw a bit more light on this for everybody. The stand for deliveries. The stand for deliveries in both silver and gold have been absolutely massive. And going to gold for a moment, I mean, there was some incredible figure at the end of March. I mean, yesterday, the stand for delivery was, I think I worked it out, 108 tons of gold. I mean, 108 tons of gold. The other thing that's interesting is that at the end of January, when the February contract expired, there was also another very big stand for delivery number, not as big as this one. This one was a record by a country mile. But if you took 2 days together, I mean, we were looking at something like 30,000 contracts. So, these are huge amounts. And every day, you get more and more stand for deliveries coming through. Now, the question really is, are these actually delivered? I mean, we know that, it doesn't necessarily leave the COMEX vaults, but it seems to me, I mean, there was a guy called Rafi Farber who, is very much if you like, a gold bug, but an investigative one and a very, very good one. And he decided some time ago to stand for delivery on a contract, on a futures contract. And he chronicled the difficulties he had in the whole process. And, if that is being repeated today, then there is a huge, huge backlog of stands for delivery, which would explain why it is that with the potential threat of tariffs, if you like, on imported gold, everybody in COMEX is trying to grab all the liquidity from around the world that they can come across, because there are unsatisfied stands for deliveries. I mean, I was guessing that there was a big whale out there. I mean, we're talking about $10 billion payment for 100 plus tons. This is a major amount of money. And the other thing is, of course, if you think that the Asians might be involved, and I've been noticing that the Asians seem to be, they're the buyers in the market at the moment, because overnight is when gold goes up, and then they sort of damp it down a little bit, if you like, during the day. So the Asians are buying, and if it's Asian, then actually the way you ought to look at it is they're not buying gold, they're selling dollars, which is an interesting thought. The establishment, if you like, and I don't mean the sort of the swaps, but the big boys, the JP Morgans and the the HSBCs and Goldmans and so on, have basically protected themselves. They know it's going up. And we get confirmation of this because the analysts say it's going up. They're putting in targets of, I think Bank of America said something like $3,500 this year. This is the sort of thing analysts say, but I think they wouldn't be saying this unless, there was a sort of internal confidence, if you like, that this doesn't do any damage to the book. I'm not saying that the Chinese wall has failed. I think that would be going too far. But the fact that they are talking like that, and there's some sort of story out of Goldman Sachs that, if this happens and that happens, it could be $4,500 sort of thing, So they're definitely going in that direction. And they read the charts. You and I read the charts. We can see this, and we can see that, okay, things don't go up in a straight line, but the direction is quite clear. So these guys are not fools. They're not fools. And nor are the swaps. The swaps actually see the position and, okay, they trade it and they make lots of money trading it. But the problem is that their mark-to-market values are deteriorating the whole time. They want to control that. But the people who haven't bought this are everybody else. I mean, the extraordinary thing is, less so with silver, but if you look at open interest on COMEX, gold COMEX, I mean, we're now, on preliminary figures, we're just under 500,000 contracts. This is not an overbought market at all. And if you look at the ETFs, as some sort of indicator of public interest, it's just beginning. It's only just beginning. And you and I know that from the psychology of the market, that when something breaks into new high ground, it's only then that perhaps that the wider public sit back and say, this is interesting. And in this case, it's even more interesting because the wider public just don't understand what the hell's going on. So, yeah, and not only that, but their compliance officers say, no, it's not a regulated investment, so you can't buy this. So they're forced into buying ETFs. I mean, and the whole of the mining sector has been ignored, and the big brokers have more or less shut down their commodity and mining side. So, when it comes to the portfolio shifts, and here we are, end quarter one, when this is actually being recorded, and this is what, the 2nd of April, end of quarter one, an investment manager sitting there, he's sort of thinking, I got to write a report. What have I got to say? And you can see that the tech stocks are tanking. Bitcoin, if he's stupid enough to have some of that, is tanking. And ordinary, financials are tanking. Other industrials ain't doing too well. In other words, all the sort of momentum stocks are really coming apart. And if you look at the best performing asset of the lot, it's gold and silver. And I haven't got any. So this is early days, very early doors for this, for this change. Quarter one is terribly important because, this coming week or coming 2 weeks, there will be committee meetings to try and get investment strategy going. And, they'll be looking at this, come on, why have you missed this? I don't know what's happening. I mean, I'm lost. Help. You can see the problems. But unless they actually load up on gold and gold substitutes and silver substitutes, their performance, just look at the charts, is going to be very, very badly compromised. And, investment managers don't necessarily want to make money for their clients. I mean, what they've got to do basically is do better than the indices. And the one way in which you do it, quite simply, is to sell the indices in the bear market, which they must be beginning to suspect is the case. So you're going to have big portfolio shifts. There is one portfolio shift, which of course every investment manager does at a time like this, when the recession coming. What they do is they sell down equities and they buy bonds. But that's not going too well either. I mean, you look at the U.S. Treasuries. I mean, just do the arithmetic when you get a recession coming along. You've already got a 2 trillion deficit, despite Doge, and you're going to get less income tax. You're going to get higher welfare costs, and so on. What's that deficit going to do? And not only that, but when you get the GDP not growing as fast as the debt, you are in a debt trap. And what do the foreigners do? Oh, that's the other thing. The foreigners own something like 14, 15 trillion of US equities. And when they see a bear market, are they going to just sit on that and just watch it go down to 14 trillion or even lower? No, they're not. They're going to sell. So you've got these big cross currents going through. I think it's a fascinating time. I think it's absolutely fascinating. And there is only one answer that I can see that's going to come out of this. And that is, there are going to be very great portfolio shifts in favor of precious metals, in favor of commodities as a whole, because copper as well has been shooting up. Though I think that as a story is more of a pure tariff play, if you like. American manufacturers sitting there thinking, we don't want to pay 25% over the market for our copper, get it in. So I think that's certainly been happening in that case, and presumably in other commodities as well. These tariffs are really, on the one hand, they're driving up commodity prices in America, and at the same time, they're driving every other economy and the American economy downwards. This is actually, I think, almost perfect storm as far as precious metals are concerned.